This is Jim Emter of Ahn and Company, Alexandria, Minnesota, with your closing grain and livestock comments for April 2nd, 2020. Corn market today down 1 to up 2. Front months leading the charge lower, back months higher. Soybean market down 3 to up 5. Same token, front months leading a little bit leaky to the downside. Back months a little bit more supportive. And the wheat market down anywhere from 5 cents Minneapolis to 7 to 10 lower in Chicago and Kansas City. So another choppy day. Market trying to stabilize and settle in here for a minute. Not the worst thing in the world here to see some consolidation. That's actually encouraging to see for both the soybeans and to some degree the wheat, even though the wheat market maybe leaked a little more than what we had hoped to kind of hold that support mechanism. But soybeans settling in here is very important. We're seeing spreads start to begin in the market here again, and that just kind of is healthy for this time of year. What is semi-encouraging is the last 3 big waves we've seen in beans. We've kind of seen this first initial move higher, consolidation, and then movement higher from that point forward. So we'll kind of see how that evolves. Corn market still holding the lows off the front contract. December was into new lows, and really believe that's why you've seen that market stand back up here a little bit. But we're stuck here for a moment, longing for new news. Some of the news around is that OPEC, Russia, and the U.S. may be working towards some form of deal. We've seen a number of different things flying around about what Saudi might cut on production, and that got the corn market excited at one point today where all the grains accelerated higher, at least corn and beans did, but settled back as we work towards the close. On the feeder cattle market, live cattle, hogs all limit down, 675 in feeders lower, 450 in lives, 450 in hogs, and it was really a rough day there once again. Continued concerns over this COVID-19 shutting down slaughter plants, backlogging the system, and just creating an environment where the retail shelf is flying, but beginning to slow to some degree. And we're seeing cutouts fall dramatically yesterday, and that's obviously weighed in here on this market. So until we've got something to grab onto other than these slaughter plant concerns, we're just stuck here in a bit of a rut for the near term, and unfortunately the rug has been pulled from underneath that market. As we come along, there's going to be opportunities ahead, but like I said, at least on the initial side, we're going to see selling pressure as they come, and we're just going to have to be attentive to price counts as we can develop them. But right now, it just seems like a risk-off phase, and one we've just got to try to endure at least as best we can. This has been Jim Emter of Ahn and Company, Alexandria, Minnesota. Trading in futures and options involves risk of loss and is not suitable for all producers. Past performance is not indicative of future results. This is a solicitation. Have a great afternoon.